Tesla Q1 results. How bad were they really? Let's take a look. Here's an article I wrote and published to Substack. My Substack is free. You can find the link to it in the description down below. I'm a little mad at Elon because Twitter's at war with Substack. It's making it very difficult for me to grow my Substack. Anyway, so first of all, Tesla is struggling so hard right now. The Model Y in Q1 became the best-selling vehicle in Europe of any kind. It also became the best-selling vehicle in the United States, excluding pickup trucks. We love our Fords here, don't we, folks? All right, rough start. So obviously, we're dealing with a tough macro environment here. We've got high interest rates, which obviously are very bad for these big ticket items, such as houses, such as auto, cars. As the uncertainty grows, we keep seeing more layoffs in addition to rising interest rates. So these things tend to slow down in these high interest rate environments, right? So Tesla's margins, their operating margins have taken a hit. But as you can see in the chart here, Tesla's is the red line. It's still in line with the S&P 500, so they've got great operating margins that are about double the rest of the auto industry. So realistically, Tesla can keep pushing those margins all the way down because, as I said, we're going to push for growth over profit margins, which is the right move. You want to get as much market share as you can while you have the lead. So obviously, Wall Street does not like this, but as I wrote here, Wall Street will not be happy if these margins continue to decline. But luckily, if you're a long-term investor, you don't have to give a shit about what Wall Street thinks. So here's a quote from Elon. "We've taken a view that pushing for higher volumes and a larger fleet is the right choice here versus a lower volume and higher margin. However, we expect our vehicles over time, this is important, will be able to generate significant profit through autonomy." So we do believe we're laying the groundwork here. It's better to ship a large number of cars at a lower margin and subsequently harvest this margin later down the road as they perfect autonomy. So realistically, Tesla's operating margin has plenty of room. They could keep dropping prices, which, by the way, what do you think is going to happen if they keep dropping their price? The rest of the auto industry is going to have to as well. Because let's just remember, Tesla here only has to sell, they're on track to do, let's say, 2 million vehicles this year. The other auto companies selling 5, 6 million, in some cases maybe as much as 10 million. It's going to be very hard to move all those cars without dropping their margins. So the entire auto industry, if things were to get really bad, you're probably going to see these margins start to decline. So obviously, full autonomy, it's been promised for quite some time, but it is making significant improvement. If we just look year over year where it was and where it is today, it continues to improve, and as long as tremendous progress is being made, I remain optimistic on that front. Now, there's also a much larger trend at play here, which I'll touch more on later, but I think that it's very important to just consider that maybe what's not important here is electric vehicles and EV sales, but who has autonomy, right? It's looking likely that that's actually the more important part of the puzzle here, and it doesn't seem like anyone else is anywhere close to Tesla on that. I mean, they're not really close with EVs either, but, we know that, but the autonomy is really what is going to set them apart, and I'll touch more on autonomy later and how it fits into a much larger trend that I think is playing out. So here's a nice chart from James Stevenson, who in the past I've used people's stuff, Dave Lee, and people are telling me to give credit to them, even though I always tag them. So I made sure, source, James Stevenson, there's the Twitter link. He even took the time to watermark it himself. I mean, I always give people credit. I don't know. Are people stupid? Am I being trolled? I don't know. Anyway, this is a fun little chart. The top 10 EV players, sales through February of this year. That red bar is Tesla, dwarfing everybody else put together. And what's hilarious is if you look, that Tesla's growth, this is for US sales, first couple months of the year. Tesla's growth from 2022 to 2023, they grew 24,000 units, which is more than if you combined the rest of the top 10 companies here together, you don't get that much. They grew more than the rest of the industry sold last year. And again, I think it's very important to remember every single one of these companies you see here, except Rivian, obviously all of the legacy OEMs, every EV they sell is one less profitable ICE vehicle. They're competing against themselves, they're cannibalizing themselves, and they're not making EVs that are profit yet. This is all very important. So we got a mention of the Cybertruck, which the delivery event is anticipated for Q3. Don't hold your breath on that one. And there's been this hot debate on whether Tesla needs to pay to advertise right now. I think making the Cybertruck is the only advertising Tesla needs. right? I mean, once those things are on the road, it's going to sell itself. It's going to bring more attention to Tesla. They are masters of the attention economy, which we've talked about extensively in the past. But it doesn't make any sense for Tesla to advertise if they already, I mean, they literally said in the call, demand is exceeding production. So as long as that's the case, why would you advertise? No brainer. A few other fun things. We've got energy, which energy's growth is probably going to exceed vehicle growth, right? Which we've been talking about, energy. I've been discussing energy and insurance for months here. So again, even if these auto margins continue to decline and the growth rate continues to decline, things like insurance and energy are growing at astounding rates, which I won't get into because we've talked about it so much already. But check out my other videos and articles on Substack for more on that. So right now you're buying Tesla, which is allegedly just a car company. You get that free call option on the entire energy business, which is no one's paying attention to really right now. All right, full self-driving we already talked about, but Dojo, talk about another free call option. They were saying, so Dojo's Tesla's supercomputer, they're using it to train the full self-driving, saying that it has the potential to become a sellable service akin to what AWS, Amazon Web Services, is for Amazon. So, put this in the bucket of long shots or free call options that you get with an investment in Tesla today, which, remember, is just a car company, right? All right, so they gave a few reasons for the decrease in the margins. One of them I thought stood out was that this quarter was part of their multi-quarter plan to move to a more regionally balanced mix of build and deliveries, which I think is good. That's healthy for the company. But also, if we just do the simple math, right? Every time the Fed raises interest rates, going back to the rates for 1 second, it makes cars that much more expensive, right? So this is going to force all auto companies, not just Tesla, to adjust accordingly, right? Tesla reducing prices just means they have to now account for the additional price people are paying when they go to finance a car and they have to pay 6% interest rates as opposed to 3%. So really, if you were to do the math on that, the numbers are the same. It's just that every time the interest rates go up, Tesla's got to decrease their cost of the car because people are still paying the same amount. They're just paying it, in the form of interest payments. So there's a bunch more stuff. I'll let you read the article. It got into about their lithium refinery that they are starting at Corpus Christi, which will be just outside Austin, Texas. If you want to read about all that stuff, be my guest. Now, let's look at the financials real quick. So again here, let's look at these vehicle sales. Look at the deliveries, okay? Year over year still grew 36%. The trend, you see the clear trend here. As long as each quarter this number is increasing, which remember Q2 2022 was only a decrease because Shanghai was closed for like a month or two. But every quarter the volumes are increasing. Q1 is their worst quarter. Q4 tends to be their best quarter. So you can kind of just project out here for the year what this should look like. They're doing fine. Why do you need to advertise if you're having record quarter after record quarter? As long as they're selling more vehicles each quarter, silly. And again, they're production constrained. They're selling every car that they make. So if we just look at the revenue real quick. Now, the free cash flow was ugly. They only brought in $441 million in free cash flow, down quite significantly, but a lot of that had to do with an increased CapEx, but there were a lot of one-time expenses, and obviously profit margins are down, so you're going to get lower free cash flow. The important thing is Tesla is financially stable. They're in a great position. They have no debt, so it doesn't really matter. They have plenty of cash on the balance sheet. Again, they can just play for market share here. They're already profitable. They can just run those profit margins all the way down. It really doesn't matter. The train just keeps chugging along. So, but if we look, automotive revenues were pretty good, up year over year by $3 billion. Okay, so profit margins went down. Now, energy revenue was up 148% year over year. Services and other revenue up 44%. Now, obviously, the bulk is the automotive revenue coming in at almost $20 billion. Energy is only $1.5 billion, but again, if you just look here, energy was only $616 million a year ago. It's up 150%. It's going to keep growing and becoming a bigger piece of the pie here. And again, this is another luxury that the other automakers do not have, to rely on these other segments of the business. Not even to mention Tesla Insurance, which we know is also growing rapidly, that we've discussed extensively. So operating margin was down only 11%, but again, so they can go another 10% lower and still be making a profit, and that's all they need to do. They can just swallow up as much market share. EPS, 73 cents. If we kind of project out for the year, Again, like I said, Q1 tends to be lower. Let's just say Tesla's able to bring in $4 or $5 of EPS on the year here. So at the end of 2023, if you assign them a 50 PE, the share price should be like $250 if they brought in $5 of revenue. It'd be $200 if they brought in $4 of revenue. And you can kind of get an idea from there. I mean, we can go into lower PEs, but again, I think when we get back to the good times, Tesla will demand a high multiple because of all of these other things they got going on here. So, where the stock currently sits at like $160, to me seems fair. I mean, anything can happen in the short term here. So in conclusion here, quote from Elon, "We're taking a view that we want to keep making and selling as many cars as we can. Despite this being an uncertain macro environment, this is a good time to increase our lead further, and we'll continue to invest in growth as fast as possible." Zachary Kirkhorn had a great quote as well. "What's really important for us this year, in addition to managing the day-to-day of the business, blah, blah, is what 2024 and 2025 will look like. They are investing for the future of Tesla. And so using the cash generated from the sale of products today and reinvesting that is very important to us. I think that what happens to margins over the next couple of quarters, that only matters in the context of what that means for our ability to reinvest in 2024, into 2024 and 2025. They have a long-term plan, a long-term vision. Companies with long-term visions tend to be the companies that do well, as opposed to the ones who just focus on this quarterly nonsense that it really doesn't matter in the long run. Profit margins, EPS on a quarterly basis, what matters is that long-term trend, the long-term trajectory and how we're doing. They sold a record amount of vehicles. Everything is fine. More from Zachary. "I just want to caution folks about reading too much into what happens over the near term here, because we're very focused as a company on making sure that when we exit this macroeconomic situation, this company is positioned in the best possible way." Music to my ears. Before we finish up here, back to that trend I mentioned. So again, Tesla, if we want to look at this as what's more important here, the electric vehicle aspect, they're both important, but autonomy. There's a likely outcome here that autonomy becomes a standard, right? I think that there's a huge overarching trend on conveniency. If we just look at what are the businesses succeeding, what has done well in the past 10 years, think of Netflix, Uber, Amazon, obviously, companies that have made our life more convenient. What does a full self-driving car that is fully autonomous do for you? It makes your life incredibly more convenient. I think this is such an important point, and it's being so overlooked when people may not understand and see the value in a car that drives itself. Just think about what that does, whether it's a road trip or your daily commute, that hour you sit in traffic, that you don't have to worry about driving, and you get to your destination, you're so tired from just being lasered in on the road. You could do other stuff. You could work, There's a lot of crazy stuff we get with autonomy, I think, in the future. So again, I think that it's ripe to capitalize on this conveniency trend, and I think it will. I think there's a lot of benefits. I think there's a lot of conveniency arguments you can make. Same goes for, charging these electric vehicles in your home versus having to go to a gas station. Again, for the vast majority of people, their day-to-day, that's fine. Unless you're going on a road trip, you never have to worry about running out of battery. Who wakes up and says, "Oh, I can't wait to go to the gas station today"? Like, conveniency is a really very real trend that I think is a winner, and it's going to keep winning. Tesla, Amazon, these are the types of companies that are going to continue doing well. So I think that autonomy is a crucial aspect that nobody else is anywhere close. Tesla is really leading the way in that. Just like everything else, what else is new? If you enjoyed the video, don't forget to like and subscribe. Consider checking out my Substack in the description below. Follow me on Twitter if you want. Let me know what you think in the comments below. I'll see you guys on the next one.